Ladies and gentlemen, welcome back to the channel. We have all of your information you need to know on this market and AMC stock today, including what's coming here in after hours, what the data looked like today, and we do have some Fed speakers that are still going to be speaking, so the situation is going to be very volatile. Stocks are, for the most part, down as you are getting another rush to safety. This is a fear move. This is bad news for equity investors, at least if you are bullish. Let's go ahead and get into all of the latest developments here today. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. So, first things first, AMC stock is down about 2.5%. Not a terrible day in terms of AMC's standard, 2.5% down. Definitely not terrible considering the NASDAQ is down 0.70%. Now, what this really comes down to, it's pretty interesting. So what you're actually seeing out there is gold is up over 1% today. Let's go ahead and refresh this just so we have the most up-to-date numbers here. Gold is up 1%, so you're definitely getting a fear move. At the same time, investors are selling off the bonds. So bond yields are going higher today, and you're not getting a fear move in bonds. This is probably the worst case scenario where you're getting a fear move in assets like bonds, but you're not getting the fear move in bonds. That fear move in bonds is going to lower the yields of bonds. That would be bullish for the markets. If you don't get that fear move in bonds as well, you could see gold, you could see stocks sell off, you could see all of these different things happen, but yet bond yields just continue higher or stay flat. Theoretically, you would want to see that fear move in bonds as well to get those yields to actually come down. Okay, now let's take a look at the US dollar here. See exactly what's going on here. DXY, you are getting another fear move here today in the dollar as well. The dollar is up 0.30%. We've kind of been moving higher for a while here on the dollar. You did break trend back here in the beginning of October, but it looks like you're just continuing on that trend higher. This is bad for your multinationals. Think of Tesla that sells cars in China, sells cars in Europe and takes in foreign currencies, or an Apple that sells iPhones in China. They sell iPhones in Japan, they sell iPhones in Europe. They take in a lot of foreign currency. When they convert that back to a strong US dollar, they get less US dollars. So the dollar has a direct effect day to day on company earnings. The higher the dollar goes, the bigger problem you have. I would argue most of the downside you even seen in 2022 was because the dollar went up essentially. Let's see. The dollar went up about 20% in 2022. So company earnings, well, they were hit by about 20% due to the conversion of the dollar if you are a multinational. If you only do business in US dollars, then this does not matter at all. But if you're a multinational, which some of the largest companies on our markets are, and they do take in foreign currencies, that does hurt your earnings. So interesting what's going on. Oil is up 1.19%, still not to where it was even late September, but you are starting to claw back. So overall, you're getting a weird fear move here, and the bonds are just not seeing it. Now, if you do go ahead and take a look at bond yields today, 30-year Treasury yields are topping 5%. They are up 5.5 basis points today. Your 10-year Treasury yields are up another 6 basis points today, up over 4.9%. As you are seeing this headline, it says 10-year Treasury yields break above 4.9% for the first time since 2007. So you're getting a fear move. Stocks are selling off, but bond yields are going higher. Again, normally when you get a fear move and there's fear out there, people should buy the bonds and bond yields should go lower. That is not happening today. That is not great news. If you are an equity investor, that's like the worst possible thing that could be happening here. The reason why there is a rush to safety, probably because of this attack from Gaza on the hospital. People trying to blame Israel. Obviously, it was Gaza, right? It's since been debunked that it was Gaza, not, or Hamas, I should say, not Israel. But still, that doesn't look good considering, there's a hospital that just got hit, right? That's never going to be a good situation. And you have gotten, Iran, Saudi Arabia, Turkey, Jordan, all of these countries condemning this and basically believing that it was Israel. This could really escalate tensions over there and turn this into an even larger situation. Recently, about 3 hours ago, Hezbollah claims responsibility for Wednesday's attack on an Israeli tank. They did this because Tuesday they announced 5 of their fighters were eliminated. So we'll see if that front does open. The U.S. did just say yesterday, quoting this article, it says White House has discussed U.S. military response if Hezbollah attacks Israel. So hopefully this is enough to kind of keep Hezbollah at bay, keep Iran away. This is not a Ukraine situation. The U.S. looks like they would get directly involved if someone else did make escalatory steps, Hezbollah, Iran, or any other foreign actor. So there's fear out there, obviously. And like I said many times, 20-30% of the world's oil supply flows through the Strait of Hormuz. If that were to be cut off, restricted in any way, shape, or form, well, that would have big impacts to the price of energy. Your gas bill, at least at the pump, would be much, much higher, and inflation would be way higher. So it would have a detrimental effect on the economy. We do know that for sure. Now, a lot of Fed speakers are also really supporting that we shouldn't be raising rates anymore, which that's where I find this all interesting. Bond yields are moving higher off of this. We had Fed Harkin today making some comments that you would think, would have been positive for bond yields, but who knows? This article does say Saudi foreign minister meets with Iranian counterpart to discuss current military escalation in Gaza and surrounding areas. Not exactly the greatest headline to see there. And then Biden, Pentagon has shown evidence Israel didn't hit the hospital. New sanctions on Hamas. None of that I think is too big of a deal. Let's see. I really want these comments from the Fed. Yeah, right here. Fed Harker calls for extension of pause on interest rate increases. Basically, they don't want to do anything while this situation is going on overseas, because that just means, it complicates the situation. What if oil did rise big time? Well, that's obviously going to push you into recession. You might be way too accommodative or restrictive if that, were to happen. You would just make the situation even worse for the economy. Now, let's talk about AMC stock directly. Now, AMC is down about 3.5% now. Market's not exactly, again, having the best day out there. That's for sure. But you're still above on AMC. You're still above your downtrending line of support. You've followed this since about January of 2022. So it's a long-term support line. And really this downtrending channel. You're now in this channel again. That looks good. You're probably going to hold above $9 per share, this downtrending line, until something does break in the markets, until the situation does get worse. Maybe there's more fear out there. Who knows exactly what. Even if you look at the MACD is pretty dang positive. The RSI is at 43.40. That is pretty neutral. Neither bullish, nor I would call it bearish. Just hanging out here. Now, let's go ahead and get into the Ortex data. Some interesting things happening over here. If you take a look at the option activity, you have seen 6 orders totaling $336,000 so far, with a positive order value of 51%. But when you take a look at the cost to borrow fees. Cost to borrow fees are actually increasing for the first time in quite a long time. Cost to borrow max up to 14.39%. Cost to borrow average 1.2%. Cost to borrow minimum sitting at about 1%. Live short interest of free float looks like about 8.13%. 16.09 million shares that are currently sold short. So not too much is actually changing there, but the actual estimates here from Vortex are showing a rise in cost to borrow fees. Now, 8.25%, those numbers are not true regardless. Those numbers are phony baloney. I wouldn't even pay attention to those if I were you personally. I think there's far bigger things to pay attention to. Now, if you look at the short score, you have $160.81 million worth of short positions currently sold short in AMC stock. 8.25% short interest of free float. Like I said, free float out on loan at 12.41%. Shares out on loan 24.54 million. Days to cover 1.34. Cost to borrow 1.58. And you do have utilization of 56.74. We do have the start of really big tech earnings that start today. Tesla, Netflix, and after hours. Discover is going to be an important one. Las Vegas Sands and Lam Research. Lam Research is a semiconductor company. They make components for semiconductor chips. They're up a lot. They could affect something like in NVIDIA. Netflix, obviously, streamers, that's going to be important, and then Tesla, automakers, as well as even AI. So there's a lot of potential implications from the earnings today we're going to get in after hours, so be on the lookout for that. If you guys want to come trade with me live in real time, link down below in the description of this video. I did make a trade on Lam Research. I think that one offers the best risk to reward. You know, $200 into potentially 20,000. You know, those are low probability trades, but still, you're not going to find anything like that on a Tesla or a Netflix. It's really expensive to play those stocks for this earnings season. So a lot of implied volatility definitely there in those two names specifically. So all eyes are going to be on them. Now, if you look at the Stocko tracker data for AMC stock, you got 41,000 calls currently in the money for this Friday, 157,000 calls out the money. In the money puts at 17,825. Out the money puts at 109,000. So the calls are outweighing the puts on an in the money basis by 2 to 1, and there's about 50% more calls out the money than puts out the money. This is very strong. This is showing you a lot of bullish positioning for AMC stock, and that continues to be the case even as you do look at the Vortex data over here. Look at the options. The puts call ratio is at 0.76. I've pointed this out many times, and I do think it's a strong thesis to my bullish thesis. The put to call ratio is way down compared to where it was. You now have the ability to see a big upside move without essentially the overwhelming amount of puts kind of pushing the stock back down. So we will see what happens, guys. That's going to do it for this update. AMC stock is now down 4%. Markets are actually trending upwards as well. So you're getting a little bit of that divergence happening right now. We'll see if that continues into the end of the day. Nonetheless, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.